Good morning and welcome to Market Cafe with me, Ankur Mishra and Kanishka Sarkar. In this 1 hour, we'll bring you all the details and news which matters to you before opening of market. But let's begin with an eye on the globe and especially Wall Street. Good morning, Kanishka. How were the US markets yesterday?
Good morning, Ankur. The US market did see stocks selling off overnight, pressured by a sharp spike higher in the Treasury yields as traders grew worried that a new US budget bill would put even more stress on the country's already large deficit. Now, the Dow Jones Industrial Average lost more than 800 points or almost 2%. The S&P 500, on the other hand, shed 1.6%, whereas the Nasdaq Composite lost 1.5%. If you look at specific stock movement, Target shares dropped about more than 5% after the big box retailer cut its full-year sales outlook with executives citing tariff uncertainty. On the other hand, United Health was the worst performing Dow member, losing almost 6% following a downgrade from HSBC. Major tech-related stocks like Apple and Amazon also dropped as rates increased. Now, this kind of action overnight comes after a tough session for the three major averages in the previous one, in which the S&P 500 ended a 6-day win streak, while the Nasdaq saw its first negative day in three. Nonetheless, the major averages have staged a sharp recovery since the last sell-off last month that engulfed markets since Trump unveiled those sweeping tariffs on imported goods. The S&P 500 and Nasdaq are up more than 13% and 18% respectively since then in the past month.
Right. If you talk about oil prices, it continued to slide as US crude prices stockpile. In fact, we have seen that there is a pressure which was building in for crude, particularly the concerns of oversupply. The latest AIA data showed significant inventory buildup, putting pressure on oil prices. Adding to that was pressure on risk on sentiment remained fragile. Equity, bonds and dollar also declined amid growing concerns of Washington's fiscal deficit. And if you talk about the stockpiles that has been added to 600,000 barrels, and this build-up has definitely put some pressure on the oil prices. Apart from that, the crypto is something which needs to be watched out. You would have seen that there is a pressure. If you talk about Bitcoin, that slipped past 109 on optimism around legislation. In fact, there was high demand for Bitcoins, which has pushed the prices above 109K past optimism around legislation.
Absolutely. Let's also take a look at some of the key events that we are going to be watching out today. Lots of data to track today. Well, in India, we have HSBC manufacturing and services PMI data coming in later in the day. It's also the Nifty expiry, so lots of movement to track there. Apart from that, in the US, S&P Global Manufacturing and Services PMI data is also going to be released later in the day. Apart from that, home sales data in the US is something that we are going to be tracking. In the UK, again, S&P Global Manufacturing and Services PMI data is something that we'll be watching out for. In the Eurozone, we have HCOB Manufacturing and Services PMI data again. Apart from that, in terms of global earning, we have Singtel, Lenovo and Generali reporting their January to March quarter numbers today. If you look at earnings back home, we have ITC, Sun Pharma and Grasim reporting their Q4 numbers. In terms of corporate action, it's the record and ex-date for ABFRL demerger. On the other hand, Adani Ports, Ola Electric Board, these are the two companies that are going to mull fundraising. Apart from that, Concor is also expected to mull a bonus issue. Lastly, it's the last date to be eligible for the rights issue if you're considering Mahindra Lifespaces developers.
Right, eyes will also be there on the Bitcoin, which has already touched all-time high, as I mentioned earlier. But news from war front, Israel forces continue to besiege hospitals in northern Gaza while drones attack water tanks. Reports now suggest that Israel's ground offensive has claimed 93 innocent lives, even as international condemnation towards Israel picks up the pace. The United Nations chief spokesperson has said that the limited humanitarian aid finally entering Gaza is nowhere near enough to meet the needs of the war-torn enclave's population. Within last hour, only 90 trucks have entered the region, distribute aid to the people. And meanwhile, Netanyahu promised that all Gaza will be under the Israel's army control at the end of latest offensive in his first news conference since December. In fact, the Israel military forces have fired warning shots at a delegation of the international diplomats visiting Jenin, the occupied West Bank, prompting condemnation and calls for investigations from several of the bloc's countries and its top diplomats.
That's right. Let's also shift focus to the world of macros and equities then. Now, corporates are feeling the tariff heat. Nvidia top boss Jensen Huang said that overnight that US chip export controls are a failure and warned that restrictions are doing more damage to American business than to China. He speaks of the plunge in companies' China market from 95% to a whopping 50%. The Chinese Commerce Ministry has in fact responded to the chip policy, calling it an overreaction and bullying, and demanding that the White House correct its mistakes. On the flip side, Amazon CEO has said that the company hasn't seen any signs of consumer tightening their wallets in the face of President Donald Trump's sweeping tariffs. The comments came during Amazon's annual shareholder meeting, which was held virtually yesterday.
Right. Moving on, we have US retail bellwether Walmart is planning to cut about 1,500 jobs as part of restructuring push to simplify its operations. The company's plan will impact teams in its global technology operations, e-commerce fulfillment in US stores, and its advertising business. Walmart Connect will be impacted with this move. The company will also eliminate some roles and opening some new ones according to the plan.
All right, now let's take a look at how UK inflation is faring. Now, it has surged to 3.5% in April, which is the highest in over a year. This was driven by a sharp rise in household bills, including energy and water, along with higher business taxes and minimum wage hike. Now, the jump has caught economists by surprise, raising fresh concerns about the cost of living in UK. With inflation still well above the Bank of England's 2% target, experts now warn that interest rate cuts may be delayed as the central bank rethinks its strategy amid persistent price pressures.
With this, it's time to take a quick break, but don't go away. We will bring up the Asian market check, how they are performing just after the break.
Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar, and Ankur Mishra. Ankur, let's first take a look at what the monsoon update is looking like. In fact, India is bracing for an early and intense spell of pre-monsoon showers as the IMD has forecast heavy to very heavy rainfall across large parts of the country through Saturday. Now, yellow alert is in place for Kerala, Karnataka, Goa, Tamil Nadu and coastal Andhra Pradesh as well, while the northeast, including Assam, Sikkim, Mizoram and Manipur, they're all set to receive heavy downpours. Now, let's go across and listen into both IMD and SkyMet on their forecast on the monsoon arrival.
It's a progressing rapidly, quick movement, and possibly in this week itself, maybe by the weekend, you will find it over the mainland. That's a Kerala onset, which normal date otherwise is 1st of June. So even before 27th, which was earlier expected around 27th of May, it could be 2-3 days even prior to that also. Conditions are favorable.
IMD has already forecasted that the rainfall will be above normal during this monsoon season, that is during June to September. And the expectation is, and the IMD has predicted it to be around 105% of its normal. So it is likely to bring good rainfall activity. However, we have to see how monsoon will further progress after its onset over Kerala. And we are expecting good amount of rainfall activity, which will definitely boost the agriculture sector, as well as it will support the farmers in the agriculture, particularly in rural areas.
Yes, definitely some early relief as far as some parts of India, and especially Mumbai, with the pre-monsoon showers. But keeping an eye on PFC, steady set of earnings for PFC. But importantly, the management guided for lower AUM of around 11% this year. My colleague Anurag Shah caught up with CMD Parminder Chopra to discuss the way forward and the strategies to discuss get the dues from Gensol Engineering, which has been major concern. Remember, companies have already given an application to Debt Recovery Tribunal as well as Insolvency Court.
We have invoked our security on the TRA and bank guarantees which we had on behalf of the Gensol. So as on date, 262 crore remains outstanding, and that has been 100% provided for in the financial year FY25. We are exploring different ways. NCLT is open for us. We have other recovery methodologies since all the vehicles have been hypothecated. But we want to conclude the process as early as possible, because you know that these are the EV vehicles, and early resolution is required for the preservation of the asset.
All right, moving on, more trouble it seems for the promoter of Blue Smart Mobility, Gensol Engineering, as IREDA has moved the Debt Recovery Tribunal in Delhi to recover 729 crore rupees from Gensol Engineering and its EV arm. My colleague Nivedana is joining us with all the key details there.
In a significant development, the Indian Renewable Energy Development Agency has approached the Debt Recovery Tribunal in Delhi to recover nearly 729 crores from the Gensol Engineering Limited and its EV leasing arm, Gensol EV. Now, this move follows the insolvency applications, remember, that was filed earlier this month. 510 crore against Gensol Engineering under the IBC was filed on May 14th. Thereafter, we saw 218 crore, nearly that amount, against Gensol EV lease, which was filed on May 15th. Now, this particular financial troubles comes on the heels of a SEBI interim order back in April on the 15th, in fact, that barred the promoter directors, that is Anmol Singh Jaggi and Puneet Singh Jaggi, from the securities market and from, of course, holding board positions. Remember, SEBI's probe revealed that Gensol's promoters treated the company as a personal entity, diverting funds for lavish expenses, including a luxury apartment and high-end purchases.
Well, looks like regulatory heat is building up on cab-hailing companies. Let's also talk about another major cab aggregator, Uber. Now, it has received notice from CCPA over alleged unethical and exploitative practice on Uber app. Now, the government has shared concerns regarding this matter. Samir is joining us with all the details.
India's Consumer Protection Authority, CCPA, or the Central Consumer Protection Authority, has sent a notice to the cab aggregator Uber over its practice or the feature of advance tip. Now, Union Minister Prahlad Joshi, who handles the Consumer Affairs Ministry, has posted on X that this advance tip feature is unethical and exploitative, and this falls under the category of unethical practice, post which the CCPA has initiated the inquiry against Uber and such other ride-hailing platforms as well. So first, such notice has been given to Uber and a detailed response has been sought from the cab aggregators. Now, the post which was shared by the Union Minister Prahlad Joshi, it categorically mentions that this practice of advance tip, this is deeply concerning, and not just this. Forcing or nudging a user to pay a tip in advance or for faster service, this practice is unethical and it is exploitative as well. And this entire practice falls under the category of unfair trade practice. In addition to this, Prahlad Joshi also mentions that tips, whether it should be given or not, it is a prerogative of the consumer, and it should be a matter of right whether to give or not. The minister has also mentioned that this entire the purpose purpose of the government is to maintain the transparency and accountability, and which is the paramount role of the government to ensure it that users should not be exploited, based on which this notice has been sent. Now let me tell you that this advanced tip feature which is there on Uber platform, so this when a user books a cab service, so this feature pops up, and this makes the user that if they are giving a tip to the driver, then it goes to the driver's account, and the user also has a feature to change this tip or the amount during the ride as well.
Thanks, Samir, for those details. Now moving on, one seen as game changer for food delivery, ONDC promised better deals for both restaurants and customers. But with failing orders and fading interest, questions are now being raised about its future. Anjali Palod is decoding what's actually happening at ONDC.
ONDC, or the Open Network for Digital Commerce, entered the food delivery space with a very big promise. By creating a digital UPI-like network that connects buyers and sellers, it offered a better deal to both restaurants and customers. And at first, it showed great potential. Restaurants on ONDC paid commissions of just 7% to 14% compared to the 20 to 25% that Swiggy and Zomato were charging them. So customers were also getting cheaper food. And by October 2024, monthly retail orders on ONDC, which includes food delivery, e-commerce, groceries, electronics and the like, had reached 6.5 million. But by April 2025, that number had dropped to just 4.3 million orders per month. So what really has changed? The network had initially provided financial incentives to onboard sellers, drive transactions and fund customer discounts. Now these payouts were crucial to building the early momentum. But in the monthly cap on incentives has now been reduced sharply from 3 crore rupees in July 2024 to around 30 lakh rupees today. So with less financial support, order volumes have dipped and user interest has also waned. But these incentives alone were not the only issue. ONDC continues to face fundamental challenges. Discoverability is poor as customers continue to prefer the more established players. The user experience is clunky and there is no central customer support. Since different apps manage ordering, delivery and payments, no one takes the full responsibility when things go wrong. As a result, many apps no longer see value in investing very heavily in ONDC. For example, Paytm has removed the ONDC section from its homepage. On top of that, the network has seen significant leadership churn. Since December, 3 senior executives have stepped down, including the CEO and the chairperson. That has left ONDC's future direction somewhat uncertain. So, did ONDC fail to deliver? Not entirely. The idea still holds promise. But without strong incentives, better execution and a clearer leadership, the network is struggling to maintain the early momentum it had seen.
And thank you, Anjali, for getting us all those details. But now moving on to another earnings then. Now, a howler of a quarter for the IndusInd Bank. Largely on expected lines though, with a loss of over 2,300 crore rupees. But even without the accounting hit and the discrepancies priced in, analysts say it was a weak quarter for the private bank. Jayant Mehta has said that the bank is hoping for a better start to FY26 on a clean slate. Now, Gaurav joins us with all the highlights there.
Well, yes, when we talk about IndusInd Bank, a very weak set of numbers is what we have seen from the bank, and the reason being that there were multiple one-offs, and these are the one-offs which were known as well as unknown. Let's not forget that yesterday only before the call, bank said that there is another discrepancy of around 173 crore rupees which they also flagged as a fraud. So first, let's go through the numbers. When we talk about interest income, that has gone down almost by 12% on a year-on-year basis, whereas when we talk about net interest income, that has gone down almost by 43% on a year-on-year basis. There are three major numbers that were crunched in as one-off discrepancy. So first is that 760 crore rupees which was impacted because of the reclassification of interest income to other income. Second was that incorrect recording of interest income of around 674 crore rupees in MFI section, and third is the reversal of 178 crore rupees from interest income because of the higher slippages that bank reported in Q4 FY25. Other than that, when we talk about excluding one-off, management said that, the net interest income would have been at around 4,700 crore rupees. But other than that, as a result of these impacts, the net interest margins have gone down to around 2.25%, which is a decline of around 170 basis points on a sequential basis. On the other hand, when we talk about PPOP, which is pre-provisional operating profit, bank actually reported losses here. The loss number stands at around 491 crore rupees. And when we talk about this estimate, that was actually, the street was expecting this number to come positive. There was another one-off impact that bank has reported as around 1960 crore rupees, as we already knew, in other income, and that is the reason why when we talk about PPOP, we have seen this kind of losses. When we talk about fresh slippages, now bank has said that they are recording new slippages in the MFI segment because there was some discrepancy, and as a result, when we talk about slippages, that number has also gone up. And when we talk about the profitability, now the bank has reported losses of around 2,300 crore rupees versus what it was estimated as a loss of around 300 crore rupees. Now let's also not forget that bank has also exhausted all its contingency buffers of around 1,300 crore rupees. So definitely a very weak set of numbers is what we have seen from the bank. Although when we talk about management commentary, they have said that in FY26 they will start with a clean slate and all the one-offs have been already discovered and booked. But at the same time, these discrepancies is something which questions the bank's overall accounting policy, and definitely on the back of this we will be watching out on what happens to IndusInd Bank today.
Definitely, Gaurav, this is one earnings where the management has not only answered questions but further raised questions. Now, next question is obvious one. What happens next to IndusInd Bank? Now, the management has clearly indicated there is a fraud which has happened in the bank in collusion with the employees of bank themselves, and this is not what it has already disclosed. It has disclosed about derivatives portfolio, it has disclosed about MFIs, but a fraud of this kind needs to be investigated, and we may see that bank reporting it to investigative agencies. Now there the matter just not remains with the bank, but it will go on the hands of investigative agencies if that happens. And not only that, even Reserve Bank of India may come in action. But next obvious question becomes, what is regulator doing for that? We have seen that Reserve Bank of India is keeping a close eye on this matter. As per sources, already there is a committee which has been formed to look over bank. MD and CEO have resigned, but all eyes are there who will be the next CEO of a bank. There is a process which has already been started by the bank, and we may expect that the three names from mostly outside the bank will be submitted to Reserve Bank of India. The bank has mentioned that it will happen before June 30, but till the time a clear-cut management comes in the bank, till the time all the air is not clear what will happen next to IndusInd Bank, whether or not processes are followed, there are more questions than answers. We may have to wait and watch what happens next. But with this, it's a time to take a quick break, but don't go away. We'll tell you more stocks which needs to be there on your radar before market opening.
Sarkar and Ankur Mishra. Now, as we are nearing the close of the earnings season, let's take a look at how Indigo, the airline, has performed in the fourth quarter. Now, the airline delivered a very strong quarterly performance with a beat across parameters. Now, revenue has risen 24.3% on a year-on-year basis to 2,150 crore rupees, whereas the net profit that has surged 62% to 3,073 crore rupees. On the other hand, EBITDA that came in at 7,000 crore rupees, up more than 50%. That's 58% on a year-on-year basis. Now, if you look at the operational data, passenger traffic soared 20% on a year-on-year basis to almost 32 million. This was especially driven by the festive demand during the 45-day Mahakumbh period. Now, other key operating metrics also remain strong. The RPKM rose 23%, capacity grew 21%, and passenger load factor that improved more than about 120 basis points. Now, if you look at cost control, that was a standout with operating CASK down 6% and fuel falling 7%, aided by low ATF prices. However, looking ahead to Q1, of FY26, the airline remains slightly cautious with mid-teen capacity growth expected, but geopolitical tensions impacting demand and pricing. Now, all eyes are now on Indigo's wide-body long-haul foray as it gears up to launch direct flights to Amsterdam and Manchester from July. A strong quarter, but clouds on the horizon as global headwinds loom and a cautious outlook for Q1 FY26. Now, apart from that, in an important statement, the airline has also stated that it will see limited impact because of the Pakistan air closure going forward. While we bring you more earnings, let's before that listen into what the Indigo management had to say about the capacity guidance and growth going forward.
For the financial year 2026, we've already provided a capacity guidance that we will broadly grow our capacity by early double digits as compared to the financial year 2025. For the first quarter of the fiscal year 2026, we expect to add mid-teens capacity compared to the same period last year. April performed well from a revenue standpoint. However, following the geopolitical disruptions, we have seen some impact on our overall revenue environment due to increase in cancellation and impact on the booking trends. We are closely monitoring the evolving trends to assess the impact on PRASK for Q1 2026.
So that was Indigo management on earnings. Now moving on, Aditya Birla Fashion and Retail will demerge its lifestyle business with 1:1 ratio. What is the rationale behind and what is the road ahead for these two companies? Snehi is joining with all those details.
Well, yes, so ABFRL or Aditya Birla Fashion Retail Limited is going to be in focus today on the back of its demerger. ABFRL will be demerging into two listed entities. One is ABFRL and the second one, the demerged entity, is going to be called Aditya Birla Lifestyle Brands Limited or ABLBL. The demerger ratio for the same is 1:1, which means every existing shareholder of ABFRL will get one share of ABLBL for every one that they hold already in the company in ABFRL on the record date, which is today. So that's important to note. The rationale behind this, the management has said that this will allow sharper focus on individual business strategies, and the demerger will help unlock existing shareholder value by discovering individual the price discovery of individual entities as well. The road ahead for ABLBL, remember when the company had their analyst meet about a month ago, Nuvama had come out with a report, and this is what the structure going ahead is going to look like. The demerged ABLBL will house Madura Fashion, Louis Philippe, American Eagle and Reebok. The management aims to double the current top line by FY30, growing at 11% CAGR. They also aim to make this demerged entity a dividend distributing company. And upon this demerger, ABLBL will have a debt of 7 billion rupees, that's approximately 700 crore, that the company aims to repay over the next 2 to 3 years. What's going to happen for the existing company? The road ahead for ABFRL, following the demerger, ABFRL will house Pantaloons, Ethnics, luxury retail and the digital first brand TMRW. They will also be housing designer-led brands like Shantanu and Nikhil, Sabyasachi, House of Masaba and Tarun Tahiliani. And going ahead, ABFRL will have a debt-free balance sheet and net cash of anywhere between 1200 and 1300 crore post the demerger. So that's what the structure is going to look like going ahead. But well, yes, the record date for this demerger and spin-off is today.
All right, thank you, Snehi, for getting us all those details about the demerger. Now, let's move on and focus on another earnings candidate then. ONGC has posted a mixed set of Q4 numbers where revenue, EBITDA and margins have come in above estimates, while profit has been a miss. Varun is joining us to do all the number crunching for us.
Well, it has been a mixed quarter for ONGC. If you look at the revenues, they have gone up by around 3.75%. We were expecting the revenues to be flat. The EBITDA, there has been a decline of around 0.25%, but we were expecting the EBITDA to decline more than 4% and the EBITDA margin to come at around 53.9%. But the EBITDA margin has come at around 54.3%, although it has reduced from 56.5%. Now, why has been there outperformance in EBITDA when compared to our estimates? If you look at the overall crude oil production and the gas production, they have gone down by around 1 to 1.7%. In fact, the crude oil production on a quarter-on-quarter basis is up by 1%. We were expecting the crude and gas oil production to actually decline by 2 to 5%, and the overall realizations, because of the reduction in the overall crude oil prices, we were expecting the realizations to actually dip on a quarter-on-quarter basis. But if you look at the crude realizations on the nominated basis in dollar terms and also in rupee terms, they have gone up by around 1.6 to 4.15%, and that's the reason you are seeing the EBITDA and EBITDA margins have been better than our estimates. But if you look at the profit has actually gone down by around 21.7%, and they have come at around 6,000 8,449 crores when compared to 8,810 crores that we were expecting. If you look at the overall cost structure of the company, that has gone up, especially the survey cost and also the exploration cost. If you look at that, that has gone up from 1,400 crores to more than 4,000 crores, and that's the reason you see the overall profitability has reduced from 8,240 crores to 6,448 crores. So if you look at the overall results, we were expecting the results to be more subdued. They are not that subdued, but yes, there are no fireworks as well.
All right, thanks Varun for that. Now, FMCG major ITC is all set to report its Q4 earnings today. Street is penciling in for a muted set of earnings for ITC as well. Let's go across to Snehi to get a sense what could be the scenario for ITC earnings today. Snehi, what should one expect from Q4 earnings of ITC?
Well, absolutely. When you talk about ITC earnings, one can expect a muted set of numbers from ITC for Q4, but the numbers, remember, are not exactly comparable on a year-on-year basis, because this time last year the numbers also included the hotels business, and this quarter that number has been, the business has been demerged, the hotels business. So other than that, if you take a look at what the street is penciling in on the revenue front, we're expecting the number to come at 16,980 crores compared to 16,579 crores, which is up 2.4% on a year-on-year basis. But other than this metric, we're expecting a cut for the remaining three. That's EBITDA is expected at 6,018 crores, which is down 2.3%. Net profit is seen at 4,943 crores, which is down 1.5% on a year-on-year basis. Margins are also expected to contract, seen at 35.4% compared to 37.1%. What's going to be the key expectation? It's expected that the cigarette business will largely be steady, and volume growth for the same is expected anywhere between 4-4.5%. So that's what the cigarette business volume growth is expected to look like. 6% sales growth is what we're expecting to see in the cigarette business. But let's talk about the paper segment. Remember, there has been an adjustment here also. They've acquired a major paper player in the quarter gone by. Paper segment will remain weak. Sales growth estimated at just 4.5%. Paper biz PAT to dip due to competition from imports. So the paper business is also going to be important to watch out for. When you talk about their FMCG business, sales are expected to grow at 4%. And overall, if you take a look at their net profit and margins, they're expected to be heavily under pressure on the back of raw material inflation, especially if you take a look at commodities like palm oil, maida, and there's also negative pricing in the notebook segment, so this could be hampering overall profitability. And lastly, if you talk about their agri sales business, agri sales are likely to surge 20% year on year on the back of a soft pace that we had seen this time last year. So what's going to be important to watch out when the numbers finally do come out? Demand outlook on rural versus urban, the company commentary on this is going to be important. Competitive intensity, raw material trends, their outlook on their raw material pricing as well, agri business outlook, and the pricing strategy going ahead is all going to be key to watch out for. So all eyes are going to be on ITC, that will be coming out with its numbers later today, but well, yes, a muted set is what we can expect.
All right, a muted set expected from ITC. But now let's bring back Varun, who's standing by with the Q4 preview for Sun Pharma. All-round growth is likely, except in the rest of the world business, which excludes India, emerging markets, and the US. Now, since a base effect will kick in, Varun, what is the street expecting?
Definitely. So we are expecting good set of numbers from Sun Pharma, wherein the revenues are expected to grow by around 9%. EBITDA is expected to grow by around 19.6%, and we are expecting it to come at around 3,630 crores. Now, the company has maintained around 28% margin throughout this year. So we are expecting the margins to increase this quarter as well from 25.3% to 27.7%. Although it is not at the 28% level which the company has, reported in the last 3 quarters, but yes, on a year-on-year basis, we will see around 240 basis point of increase, and the profit is expected to go up by around 6.6% to 2,830 crores. Now, India and the emerging market business, they are expected to perform well, and we are expecting a growth of around 10 to 13%. And the US revenues, if you look, we are expecting the revenues to come at around $485 to $500 million. Now, for the rest of the world, yes, on a quarter-on-quarter basis, if you look, the overall growth would be subdued around 15 to 17% decline. Now, there was a milestone payment in the previous quarter, I mean the Q3, of around $45 million, and that's the reason we are seeing on a year-on-year basis the rest of the world will actually underperform. And also this will impact the overall global specialty business, because the rest of the business will impact the global specialty business, and also there is a sequential decline due to inventory built up. So that's the reason on a year-on-year basis, quarter-on-quarter basis, you will see a decline, but on a year-on-year basis, they are expected to be good. Keep an eye on the Revlimid sales, what the Sun Pharma would be reporting this quarter in the US, because the Revlimid sales are actually expected to support the overall US business. The R&D spends, they are expected to go up around 80 to 100 basis points on a quarter-on-quarter basis, and that's the reason on a quarter-on-quarter basis the margin is expected to decline to some extent, but on a year-on-year basis it is expected to grow. Keep an eye on some of the products that the company would be launching. On an overall basis, we are expecting good set of numbers from Sun Pharma.
All right, thanks Varun for that detail. Now moving on, overnight flight operations were hit by severe weather across North and East India. An Indigo flight from Delhi to Srinagar ran into sudden hailstorm mid-air, damaging the aircraft's nose. Thankfully, it landed safely in Srinagar with all the passengers unharmed. The aircraft is now under inspection. Meanwhile, heavy rain and thunderstorms last night disrupted flights in Delhi, Chandigarh and Kolkata, affecting multiple airlines. Now after that, it's a time to get some words of wisdom. Vikas Khemani, founder Carnelian Asset Management, shares a list of sectors he is positive on. Let's listen into what he had to say.
All these three things about US economy we've been talking about, have not surfaced with the rating downgrade. It's been around for more than 1.5 to 2 years. I know. I mean, US debt, deficit, or for that matter, in delinquency in their credit card has been around for 2 years. So I think very often we tend to call these situations, but nobody. Fact of the matter is nobody knows what time US economy will get into recession, what kind of it will peak out. So I think, and generally speaking, IT sector, in my opinion, is not. I mean, we've seen IT sector has been reasonably all right, growing well in last 3-4 years, and these kind of intermittent cycles come in any sort of industry. We are not very negative on IT sector. We've been saying for quite some time and continue to remain positive, because IT is not only necessarily linked to economic growth, because a lot of digital transformation has to happen, the cost rationalization has to happen, and IT is a key enabler of that. So I think there are many more levers other than only the economic growth. A lot of times companies have to spend money in order to just survive, forget about grow. So I think and some of the sectors which are in the manufacturing front, where India is exposed, not much exposed to US, there India tends to benefit from the market share gain, which is happening because of China plus shift. And that I think can compensate for if economy slows down. Currently, there's no such sign, but if that slows down, and market share gain can compensate for that. So I don't see US economy slowing down as a major risk to Indian economic growth. Market sentiments can go up and down depending on how the news flow comes, but I don't see major economic risk if US were to slow down to India.
So that brings me to the follow-up question. You did say that there are a lot of other manufacturing themes also that one can watch out for, given the fact that you will have the China Plus One strategy also at play that could benefit some of them. So which are some of those sectors that one should watch out for very closely, given the fact that we are actually trying to get some sort of strength back home in those sectors?
Sector broadly remains same. We've been quite positive on banking and financial services. We've been positive on manufacturing. We've been positive on the entire pharmaceutical space. So in general, I think, we've been very positive on the spaces which are aligned to Indian economy. And generally, that's what is kind of happening. So sectors and economy really don't change very often, because India is in a very structural transformative growth cycle. And this is going to last for long. So the only thing is that which will grow faster. So at this point, we are significantly overweight in banking and manufacturing, I said. And, and there are sort of sectors within consumption you pick up. There are stocks within the consumption you pick up. There are stocks, excuse me, in the IT sector, in the mid and small cap space, which are doing well. So I think, it boils down to, so these are some of the sort of areas of exposure we do have.
All right. Hi, Vikas. Good morning. Shrishti this side. And Vikas, I think that after your visit to Omaha, where you did visit the Berkshire Hathaway shareholder meeting, we are connecting now on the channel. Give us some sense that what has been the major key takeaway, because this shareholder meeting was indeed a special one, because from next year on, you might not see Warren Buffett taking the center stage.
I don't know that whether next year he will be there or not. He's still chairman. So, I mean, you will learn a lot from the legend, and we all know that he's a legend. So, and I think all the learnings are definitely around. He's been very, very big believer of long-term investing, compounding, associating with which stands out with associating with good quality people, whether it is, as an employer or whether it is a partner. I think that he has been espousing for a very, very long time. So I think quality of people you associate with is very, very important. It stands out in every interaction. So there are lots of, takeaways one can take from when you meet, Oracle of Omaha. He's a legend, right? And plus how, disciplined he could be, even if despite having so much cash on the books, how he's been, and how he's transitioning to the next level of leadership. The moment he realized that he's kind of slowing down in his decision making, he's very happily to kind of letting it go. So these are some of the quality you admire him as a person, you admire him as an investor, you admire him as a leader. So there are lots to learn. I mean, one can probably do an hour show on that.
Certainly, but Vikas, what sort of a sentiment that you are picking up when it comes to the foreign institutional investors, especially for India? Because of late we have seen the FIs making a strong comeback, especially in the cash segment. Do you believe they are here to stay after what's been happening in the globe across?
I mean, FI flows are going to be very robust. The moment Indian Fed rate starts coming down, whether it comes in 3-6 months, it will find a next level of acceleration. But anyway, dollar index itself has kind of paved the way for flows towards emerging markets. And so I am very, very optimistic and positive of foreign flows towards India in particular, emerging market in general.
All right, that's the expert view coming in on the markets, both Indian and global. But with that, we're completely timed out on this edition of Market Cafe. But don't go anywhere, as the market is going to take all the action forward.
There's no particular time to rise.